The vast majority of you guys expect Tesla to close out this year in between $350 per share and $400 per share. This would be close to a new all-time high. What is it going to take to get Tesla stock to that higher end range of about $400 per share? And how could this actually be a possibility pretty quickly? The rest of this year is only just a couple of months. And I think Elon, maybe even on the last earnings call, set us up for a big surprise next earnings. I hope you are ready for all of this information. If you are not, I hope you get ready. And if this is your first time to the channel, hit that subscribe button as well as the like button only and only if you want to stay up to date with everything happening every single day with Tesla as well as the broader markets and stay informed and make more money. If not, then this is not the channel for you. This is not the video for you. But with that being said, let's go ahead and get straight into it. According to the poll that I put out, that almost 800 of you guys voted on, 51% of you, over the majority, expected Tesla stock will close the end of this year in between $350 and $400 per share. Some of you guys expect $250 to $300, and about 13% of you guys expect $400 to $500 per share. Now, the typical bear is going to tell you this is absolutely not a possibility for Tesla. And to a certain degree, you have to see specific things happen with Tesla to get this to happen. Now, as we talked about in the last video, which I highly recommend you guys watch, this week is going to be insane. You're going to have the Fed meeting, big tech earnings. You're going to have economic data. The most important catalyst for Tesla specifically is Fed Jerome Powell. There's a certain degree of safety in stocks like Tesla, or really just Tesla for that matter, where the business is not going to collapse. It's solidified. You're going to expect to see some certainty with the business. Even if you get price cuts, it's not like deliveries are going to fall off of a cliff one quarter. You're going to have a lot of signs if that were to happen. It's a relatively safe and stable business, regardless of what the bears will say. Now, Tesla offers you growth that is unparalleled in this safe kind of business. Usually safe businesses are your stable companies, your manufacturing companies. Typically, during a normal market environment, during a normal economy, these are not high growth stocks. Tesla fits both bills that investors will be looking for after the Fed meeting. As we get clarity from Fed Jerome Powell, this is probably the last rate hike that we're going to see, and this soft landing narrative is going to play out. Although the Fed will leave the door open for another rate hike and potentially say, yeah, we still maybe expect to see a recession. They're going to be dicey about a couple things, but the markets, they're going to look at this and say, hey, we still want to be defensively positioned. We still want to be in high quality names, but we also want to be in names that offer growth. Because if the economy does slow down, but maybe not go into a bad recessionary environment, well, growth stocks outperform, and you would want to be in those kind of names. So I think after the earnings that we got last week, which the numbers by themselves were phenomenal, you really couldn't have asked for anything better. Tesla beat on all areas, and that's why analysts have only raised their price targets. Your bearish, your bullish, your neutral analysts have all risen their price targets after Tesla's earnings, or a vast majority of them have. Not every analyst has, but nobody has cut their price targets or lowered their price targets like you've seen at the end of 2022 and the beginning of 2023. So specifically what Elon did on the last earnings call was create a little bit of uncertainty regarding Tesla and price cuts at a time where Tesla was approaching a new 52-week high. Now, this sounds like he just didn't have media training and he didn't know the right things to say, and that is a possibility. That is 100% probably part of it. But at the same time, Elon is not a stupid guy. He doesn't want Tesla to fall. Most of his net worth is revolving around the price of Tesla stock. The higher Tesla stock, the better. What I think Elon ultimately did on earnings is create just enough uncertainty to cause Tesla to fall a little bit, but not absolutely crash, where on the next earnings, Tesla's going to be able to massively outperform expectations. And it's going to be one of those blowout quarters with great news on the Cybertruck, great guidance, hopefully an update on licensing of full self-driving. We'll talk about that later on into this video. But what Elon did specifically with this last earnings, with the uncertainty around if we're going to get more price cuts or not, is change the analyst expectations for next earnings. The current expectation is 79 cents of EPS. 3 months ago, this was 88 cents. 1 month ago, this was 84 cents. So Elon has dropped the EPS estimates for Q3 earnings by 5 cents. This is what I think he wanted to do subtly without causing the stock to utterly collapse. Now, your Q4 2023 EPS estimates 1 month ago was 93 cents. Today it's 89 cents. At the same time, Tesla is accelerating. Tesla is actually doing just fine. And I don't think these estimates are true at all. And I think that just creates more room for Tesla to potentially beat to that upside. Now, for full year 2024, the markets are currently expecting $4.75 of EPS. 1 month ago, you were expecting $4.83 of EPS. So this is down 8 cents just after the earnings that we just got. Again, that creates more room for a beat here. Now, obviously, next quarter is a little bit more important in the short term towards the end of 2023, as this video is mainly focused on, rather than 2024 estimates. But it's important that Tesla beats the estimates by a pretty good degree and also gives us some good news. So long story short, in order to get Tesla 350 to potentially 400 or more and breaking all-time highs, to some degree, you need to see earnings come in better than expectations on the next earnings call, in which I expect that Tesla really paved the way for that to happen with Elon's commentary on the last earnings call. And the estimates we're seeing show exactly that. Now, on the other hand, just the Fed and what I previously said, creating this environment for Tesla to see a lot of inflows, to see investors go, from high quality, non-growing companies like Apple or Microsoft because they're so fearful about a recession, to switch to stable companies, but also massively growing companies that could get very impactful in this upcoming week. Now, announcements and catalysts and things we need to see on top of this, things such as the Cybertruck or even licensing of full self-driving. Specifically, licensing of full self-driving is one of those catalysts where I believe could not only send Tesla stock to 400, but could send Tesla stock to 500 or 600 just off of one announcement of licensing of full self-driving. Now, what I did in one of the last videos that I want to highlight for you guys here in this video is I essentially looked at Ford, because I think Ford's probably the one that really is going to license full self-driving with Tesla. At some point, it could be relatively soon. Odds are Tesla's not going to want to license their software to everyone, but maybe they do. Maybe that does financially make sense. That would obviously be great for Tesla if they did that. But odds are Fords are probably going to be the first ones to get this licensing. I doubt it's going to be anyone else. I could be wrong, but if it's Ford sold about 2.4 million vehicles in America in 2022. Now, what I did is I took a 20% kind of take rate on full self-driving. Now, why I did 20% is because I only would expect like $3,000 for full self-driving. It could be more than that. I want to be very conservative here. If it's 10,000, great. Fucking phenomenal, and this calculation is way off. And it could be a much bigger event. But I would just want to be conservative, okay? 20% take rate on all Ford vehicles sold in the US at $3,000 a piece. And this is almost net profit margins to Tesla. Well, this would be about 480,000 vehicles. Times that by 3,000, you're at about 1.44 billion. If you times this by 0.90, because that's, it's about 90% net margins besides the software, and you're at almost $1.3 billion of net profits. This would add over $2.50 for Tesla's EPS. If this announcement were to happen, and I'm sure, again, I want to be very clear, these calculations are probably way conservative. It's probably a lower take rate from Ford. It's maybe 10% or 5%, but the price is probably like 10,000, right? That's probably a better one to use. I just want to be super conservative. Well, that would add over a 50% boost to EPS if this were to happen today and go into effect in 2024. Now, as the Fed does ultimately end rate hikes and start cutting rates in 2024, markets will assign a greater valuation to this. And even if this partnership weren't to 2025, well, as we get closer to 2024, if this were to be announced, markets would look at this and say, hey, this is going to be massive for Tesla's business. And if you're a growth investor and you're investing in growth, you're investing for future returns. You're not investing for today. And that's something that gets overthought when interest rates are high. When interest rates are high and they're only going higher, people want profits today. People want profitable tech today. They don't want unprofitable tech, surely, and they don't want profits down the line. People don't care about that. They don't have a long-term vision when interest rates are, at the highest they've been in decades. They want them today. And this could send Tesla stock to $500-$600 per share based on fundamental, simply put, valuations. So if you were to have that same EPS number for 2024, but let's say that EPS number is for 2025, a lot of analysts expect around $10 per share. If you were to add, call it $14 per share or, $12 per share to EPS based off of one deal to license full self-driving from Tesla, from maybe a Ford, you're going to be looking at a PE ratio that is tiny compared to what it is today. And how we'll calculate that is the price of Tesla stock around $258 per share right now. We'll go ahead and divide that by, call it 14. That's an 18.4 PE for 2025. That would be insanely low. So you would need to see the stock increase. Another big catalyst that I think you need a little bit more clarity on to get close to, all-time highs is the Cybertruck. We still don't know what the final pricing is going to be. We know there's about 1.6 million pre-orders. This, for context, is 8 times the amount of pre-orders the Ford F-150 has. But it's also only $100, $200 deposit. So it's not like there's thousands of dollars for these reservations. It's not like it's going to be hard to cancel these if people wanted to. So yeah, sure, we have 1.6 million pre-orders, but how many of them are actually going to keep their pre-orders after the pricing is announced? It's expected we could lose 500,000. If that number's smaller, well, that could be very good. Now, even yesterday, it was yesterday, I seen a Model S, and it was actually towing a boat. So I really wanted to talk to the guy. So I went up and talked to the guy and was talking to him. Right, he chose that vehicle because he has a new kid on the way and new family and all that. But I was talking to him about owning Tesla and about the Cybertruck coming out, and he's been waiting for the Cybertruck and can't wait for the Cybertruck. He's hoping later this year, but he thinks probably 2024, as most of us expect. That's when mass production will start. That's what Elon said on the earnings call. And he's excited. If that's one random guy that I've seen here in Michigan that I talked to, imagine everywhere else. People are excited for the Cybertruck. People want the Cybertruck. And the Cybertruck is going to do massive things for Tesla's business. It's free advertising forever, essentially. I mean, there's nothing like the Cybertruck out there. When you see a Cybertruck, you're going to turn your head and you're going to look and say, what the hell is that? If you don't know what it is already. And then you're going to fuel a lot more sales to Tesla, and in turn going to fuel more sales of FSD and more profits to Tesla ultimately. So demand for the Cybertruck really needs to be more confirmed and solidified. And as we start to get deliveries and more updates on where pre-orders sit, especially after the final pricing is out, I think that's a much bigger catalyst for Tesla than just saying, hey, we expect some units to be produced in 2023, but mass production in 2024. Now, that's another positive catalyst in which I think Elon really underplayed on the last earnings is the Cybertruck and production and where that's going to go. Analysts are currently expecting around 10,000 Cybertrucks to be produced by the end of this year. It could be closer to about 15 to 25,000, and that would be a number that a lot of people would obviously like compared to 10,000. If we get more clarity on that on the next earnings, that's going to be very important. But notice what I keep saying, the next earnings. You're obviously not going to get there 350, 400 until the next earnings, unless Fed Jerome Powell says some things the markets really like, and this narrative that I previously talked about in this video really takes hold, and investors buy that high quality growth name. There's not too many high quality mega growth names out there that are growing like Tesla, like 50%, 45% year over year for years now, that have a proven track record, and they're billions, hundreds of billions of dollars. Typically, when a company's hundreds of billions of dollars, they're a value company or they're a very stable, slow-growing company. Tesla is unique in that measure, so that could obviously be a force that could potentially push Tesla to, that 3 range, that 350 range. But really, to get to all-time highs, you need these things to happen, or at least you need some insight to when some of these things will happen. Licensing of full self-driving, what the demand picture looks like for the Cybertruck. Even an update to advertising could be very important. I expect advertising could ultimately grow Tesla's backlog, their order book, by 2 to 5x within the next year or two. We didn't get any news on advertising. Has it been effective recently? Has it caused more demand? Are you seeing real-time ads having an effect to Tesla's business? We got no clarity on that. And I think this just sets us up for an even bigger next earnings next time around, and ultimately a much bigger upside surprise. I don't think the way that Elon was talking about things, that even production might be slower this quarter, I don't think that's necessarily going to materialize. At least not in the way that the bears would like, as they think Tesla should be $25 per share, a couple notable bears, or even $100 per share, as Tony Saganagi thinks. Just those are unrealistic, right? And the more bears you have, the more bullish you should ultimately be in Tesla. And just keep in mind, after Tesla's terrible earnings, the bears are going to say, you haven't seen one price target reduction yet. Another catalyst in which I think could really send Tesla stock to all-time highs as well is clarity on the pricing that Tesla is targeting for vehicles that come out of the Mexico factory. We're expecting this to be called the Model 2 and could be as low as $20,000, more likely in between $23,000 and $25,000. This is your mass market vehicle. This is a vehicle nearly everyone could afford and should be a great value. Not really your longer range kind of vehicle. It's probably going to have a 200-mile range, maybe a 175-mile range, but it's going to be your mass market vehicle. It's going to be a very affordable vehicle. And if Tesla can obviously keep their margins and give us more clarity on that, this could be another big driver into a new segment. Tesla is thought of as a high-end kind of purchase. And in reality, it's not, but a lot of people think that. When you start to see a $25,000 Tesla or $20,000 Tesla, that opens the door to a whole new market than you're seeing with the Model Y in the $40,000 range, or the Model 3 at about $40,000. It's just different markets that Tesla will be able to penetrate, and that's going to have an effect to Tesla's bottom line, and that's going to have an effect to Tesla's valuation. And again, as we get closer to 2024 and markets start to really expect these rate cuts, you can start to factor in slowly a bigger and bigger valuation and actually justify that. Not to mention, again, this kind of goes along the lines of what I have said previously. Apple, Microsoft, your big tech names are already more expensive than Tesla if you factor in growth. But growth is not being valued as it should be. So if you look at PEG ratios on an Apple or a Microsoft, Apple's growing really negative year over year. Microsoft is expected to grow 10% until 2030. But Microsoft has a PE ratio of almost 40, and Apple has a PE ratio of over 35. Tesla is sitting today with a current PE ratio of about 70. Which one is, and Tesla's growing like 50%, their EPS, bottom line earnings per share number. That's what you're looking at in the PEG ratio. What's the cheaper company? Who's the cheaper company? Well, Tesla is miles cheaper than those other names. But investors are valuing that safety in Apple, or perceived safety in Apple and Microsoft, with even a lower growth rate. They don't want to assign a higher valuation to Tesla when times are uncertain. We don't know what the Fed's going to do. Things of that nature. And that's why this week ultimately could be a big one for Tesla stock and could pave the way for Tesla stock to move higher. Hopefully, to the end of the year being close to or over that $400 price tag. So these are some of the things I think we need to see from Tesla in order to get back to all-time highs. Now, obviously, I could be wrong. I'm not a financial advisor. And the markets on the first rate cut, or just, a continued pause from the Fed and further signaling of no more rate cuts, Tesla stock, the markets could rally exponentially higher from here. They could go insane. That's a possibility. And that's something I wouldn't count out, but I also wouldn't expect on if you think Tesla is going to reach all-time highs by the end of this year. Fundamentally, you need to see something driving earnings higher. You need to get, hopefully, better updates on demand for the Cybertruck, better pricing for the Cybertruck, and potentially licensing of full self-driving. And I think that's really a $600 plus price tag on Tesla stock when that does come. So if that comes, all-time highs, you're going to blow past that. So yeah, these are some of the things that I want to see, as well as an update to the Model 2 and when that Mexico facility could come online and start delivering vehicles. These things are going to have a very positive effect to Tesla. And even back to full self-driving, like I said, a lot of people think licensing of full self-driving is like way down the line, but if you're a Ford or GM or anyone else, you can't compete with Tesla. Tesla is miles ahead of anyone else on a mass scale full self-driving system that could take you from Miami to California or from Maine to California across the country. Just nothing else is even close to being able to do that. So odds are it's going to be a lot cheaper and a lot more beneficial to a Ford, to their business, or to GM, their business, if they just license this technology instead of trying to create their own and really not succeed there. It's going to take 10 years for a Ford or a GM to have as many vehicles out on the road as Tesla does that are EV that could have full self-driving software and train the software to the same degree Tesla is now. There's no catching up. So it makes sense fundamentally for a Ford or a GM or anyone else to license Tesla's technology. And yeah, they might not want to see Tesla win, but they don't want to lose way worse than they don't want to see Tesla win. So that's going to do it for this video. Hopefully this provided you a little bit of context on, what I think is important. Obviously, next earnings, Elon paved the way for a move higher. But on top of that, what you actually need to see to get Tesla at new all-time highs, as 51% of you guys expect Tesla stock could be at by the end of this year. So thank you for watching. Hit that like button, subscribe to the channel if you like my perspective and you want to stay up to date with everything going on with Tesla every single day. We cover the news. We keep you informed. We talk about analysts. We talk about broad market, everything that could affect Tesla, could affect your money, and hopefully make you more money. Most importantly, enjoy the rest of your day, and I will see you in the next one.